Hey, Dan Fitzpatrick here. I want to look at Datadog today, but first, just a general comment. Tomorrow is the CPI report, and then Thursday, we're going to get the PPI. That's probably going to move the markets, hopefully for me, and I mentioned more about this in my strategy session. Hopefully down. Like I would love to see the market tank because we're up a little bit resistance, excuse me, support, prior resistance. Support is a little bit below. And so I want to see the market come back to test that level because if it does, that really gives us a good tell for what's next. If the market comes down, and I'll show you the S&P in just a sec, but if the market comes down to test that level and that quote passes, in other words, it does find support there, we could see another spurt of buying, especially since apparently hedge funds are mostly short, um, which of course they are because they're always flipping wrong. So take that with a grain of salt. It's actually a pretty big grain. They're typically wrong. And so that's why you never hear about any of them making a crap load of money, but you do hear about them blowing up sometimes, and sometimes just about blowing up the market. Kind of like Archegos, Melvin Capital, nice trade on GameStop, dude, and a few others as well along the way. So don't pay attention to what hedge funds are doing unless you want to just fade them. But I think you do want to just pay attention to what the market's doing. Try to make a little sense out of it, but ultimately think about it this way. If the market doesn't make sense, then maybe it's not important for it to make sense. As long as you understand how stocks trade and you're in sync with it and you are able to understand what's going on in the market, what's going on with your stock to a point where you're not just flipping a coin or saying, damn the torpedoes, full speed ahead. You want to be trading with some kind of control, but it actually starts with understanding market movements and things like that. So I want to get to the charts, but first, look, if you're not a member of Stock Market Mentor, check it out, man. $7. Okay, I spent probably half an hour, 40 minutes today just talking about trading, helping people get their mind right. This is more than just stock picking. Any knucklehead can do that, and many do. But this is me wanting to make you a better trader. I really, really like to focus on that. If you have success, then I have success. If you don't have success, then, I don't know what I'm doing. So I've got a vested interest in you, but only if you drop $7. Come on, man, do that. I think, but I'm not sure. I think a pack of smokes cost more than that now. So, okay, let's get to the chart. So first, the SPY, like I promised. This is where we are right now. So we had a nice move higher out of 760 or 7,600. And what I'd love to see is a pullback to test this level right here. If we get this kind of pullback, and even, I don't think it's going to happen. I can't imagine it happen. But even if it ultimately falls all the way back here down to 750, then that could turn out to be a great buying opportunity. Frankly, I think the only way that's going to happen is boots on the ground. I don't really see that. So let's get to Datadog. So I put this on the active trade list as kind of a different type of trade because it was a sell-off. I kind of like these breakouts here like this. But the reason this wasn't taken was because earnings were just a couple days away. But it's really, really nice to see this big sell-off here on earnings and then the stock rebound. So it's recaptured the 50-day moving average on volume, 2 days of big volume. This was a crappy close. And so you'd go, okay, well, that's the end of it. Stock gapped up a little bit, traded up big time. over 6%, and then damn it, came down and closed at the bottom of the range. That was 5.75% down. So the bears are in charge. Sell off, run higher, dip buyers coming in, bears saying, nope, boom, selling their stock. So what happened the following day? As you would imagine, the stock actually gapped down, which is what happens when you get these called a tombstone doji, an inverted hammer, whatever you want to call it. When you get a candle that looks like this, most of the time the next day, you're going to get a gap down. And all that means is business as usual. It's what happens after that that's most important. And here, the stock immediately turned around and marched up all day long, closed just about at the high of the day, totally eclipsed this high. And now this stock is back to test this same level right at the 50-day moving average. So this is a shakeout trade, which is what I'm looking at it as potentially being, not for sure. But if this stock, I'll just put it this way. If this stock starts to do this, I think you're going to see a stock go to new highs. So I've got our risk set for right down here, depending on your trading style. You can set your risk at 2 or 3%. I've just framed the trade for you: a sell-off, a little bit of indecision, big move higher, and then today say, whoa, 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 wait, not so much. And then now I'm looking for that kind of move. So anyway, that's all I got for you. I hope you guys are having a good week so far. If so, awesome. 3 days left. If not, awesome. There's 3 days left to turn it around. Okay. All right. See you next time. Have a good one.